Thursday, January the 25th. Hope everybody's having an absolutely amazing trading day. Welcome to a pre-market edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you guys were able to make it to the video today. I was traveling yesterday, so didn't get this video out after the market closed. And actually, I kind of like doing these after we've had a little bit of overnight movement. It may be something that I kind of moved to, is doing a morning version or maybe even later in the evening. So something to consider. If you think that'd be worth it, leave your comments in the section below. So let's go ahead and get rolling. For those of you new to the channel, we look at the same 10 to 12 futures markets every day, and we identify tradable opportunities as well as technical areas of support and resistance where we may see turning points. But the key thing that we hear is we leave our lines on the charts. We leave our lines on the chart so that we're held accountable to the trades that we look at, and you can see how trades develop over time and indeed will oftentimes still be valid many, many days later. So let's go ahead and dive in. So looking first at the S&P. And yesterday, the S&P, we started to have the market sell off, and we were up to a brand new all-time high up there at 28.55, and then we started a market sell-off in the afternoon. And as the market sold off, and we came literally down to our 1 hour area, which we had talked about the day prior, and we bounced off of that area and then continued to rally higher. Now, some of you may not have liked the arrival, because if you go to a smaller time frame, and it was an opportunity to go candle-to-candle style of trading, maybe not catching the exact bottom, maybe getting in on a higher high, because there was a little bit of, I guess the word would be resistance just above our entry into the area on the 15-minute time period. On the hourly time period, that really didn't exist. And so, we hit the bottom and kind of continued to march up from here. So we've had about a 23-point move in the S&P since that little area. So since that area has been touched, it's still going to remain valid, but we're going to change our line style to a dashed line. Remember that a dashed line means we want to see price come into the area, and then we get long as price comes back out of the area. By price already hitting there once, we've put our hand in the proverbial cookie jar one time. So we're going to allow it to come in there again, but we're going to want to be shown that it levels that area is going to hold. So that's the S&P. Now, am I shorting anything up here? Absolutely not. Is there a chance that we could reverse off of this all-time high and get lower? Yep, I'm not willing to do it. Don't pull on Superman's cape, don't spit into the wind, and don't short the all-time high. Next, the Nasdaq. So the Nasdaq also hit our same area of entry. Hit the area, rallied higher. This one I am going to also put our dashed line on. I will tell you I'm a little bit more cautious about this one than I am about the S&P, and let's take a look at why. In the S&P, we traded just a touch into this fair price value area. In the NASDAQ, we traded all the way to the bottom of this fair price value area. So both trades worked out. Both were pretty effective, but by trading all the way down to the bottom, that means that we had to have affected more of what would have been an imbalance of buying and selling, right? We had to have eaten into any leftover buying that happened to be in that area. So while I don't think for any reason that it's all gone, because we know it can't be gone or price never would have went up, I think that it's definitely a slightly weaker area. And so we're actually seeing the NASDAQ a little bit weaker than the S&P off of that latest bounce. Once again, not putting a short in play on this. Crude oil. So for those of you, and I put a tweet about this yesterday, the crude oil level that we had talked about last week has just been gangbusters as we're sitting here up above 66, with crude oil just continuing to make its run. So as crude oil has continued to make its run, like I said, and I've said this on a couple of occasions, I think it's foreseeable and very doable that crude oil could run to 80. I think that we don't have any really on a weekly chart, any real resistance until this area right in here, which acted as support back here in the past. Right around 80 is a good whole round number. So, I wouldn't be opposed to a longer-term trade if somebody's looking for a longer-term opportunity on a potential pullback. So just something to consider for crude oil. And maybe even, by the way, for those of you that are longer-term traders, if you're not looking to stay long in crude oil, possibly USO, the United States Oil Fund, which has gone from 11.21 to 13.21 in just about a month. And that's a pretty big move for, something that's fairly lower price. So, if you're more of an investor style and not necessarily want to be looking at the individual futures markets, the way that you can do that is by using something like USO. Here is the GC, so our gold futures markets. We've got a little bit of a decent pullback here in gold, which we hadn't really seen. We got a slightly deeper pullback. So if I look at my most recent pullbacks in gold, I've got one of this length, I've got one of this length, and I've got one of this length. What do I see happening in my pullbacks? I see that my pullbacks are getting deeper. The pullbacks getting deeper is a sign of a weakening upward trend. I also see that my upward trend line has been broken if I were to connect some of those bottoms. So it doesn't mean that we're out of the upward trend. By no stretch of the imagination are we out of the upward trend. To be out of the upward trend, I need to have a lower swing high and a lower swing low. I have neither one at this point. Technically, I still have higher swing lows and higher swing highs, but my pullbacks are getting deeper, and I do pay attention to momentum of pullbacks. If I were to throw up a momentum indicator here, what you'll see is that I have higher swing highs in price, lower swing highs in momentum. So for this could mean that we have a small time frame reversal potential happening in gold. I do pay attention to momentum. Think about throwing a ball up in the air. When you throw a ball up in the air, before that ball, as it's continuing to go up in the air, is continuing to lose speed. It's continuing to lose momentum. And so as that continues to lose momentum, it'll slow down until it reverses course. So I think that we could see, and I say could here, I don't have an area yet on the hourly time period. On the 15-minute, you might have an opportunity for a breakdown if you wanted to get short below this area here. So on the 15-minute chart, you may have an opportunity for a breakdown short below that 1355 for those of you that are interested in this one. I know you'll have to catch this pretty close to the recording in order to catch that one. So hopefully I can get the recording out quick enough that you got a shot. Next, looking at our bonds and currency markets. So on our bond market, we haven't come anywhere near our area of resistance that's been put in play. Although we have stemmed the tide of falling, we haven't come to this resistance area. So this is still very much in play. The Aussie, I do like this area, which was put in earlier this week right here. I don't know if or when we're going to come back to this region, but keep this region in mind if indeed we do get enough of a pullback to come back into that area. The euro, we also have an area kind of similar to that right here. These are both really, inverse plays on the dollar, if you will. But if the dollar has a little bit of strength over the next couple of days or next couple of hours, maybe we'll see the euro fall and give us an opportunity to get long on one of these positions. And in the macro scale, that would fit into the big picture trade as well. Canadian dollar reached our short entry in the overnight hours. So that one is starting. It's kind of chopping around on its movement. Has not really made a huge movement, but we are. This trade is in play, and don't have a great arrival into the area. Although I would say this 80.65 is a pretty decent profit target. I'm going to put a little bit of a line here, just so that let me change that to a green line, so that we indicate that it is a potential profit target. Let's go a little bit before that area there, right about there, just before this fair price value area for a potential profit target in the Canadian dollar. And this thing, like I said, a little rally in the dollar would help this thing to continue to fall down just a bit out of our area. British pound, Japanese yen, copper. So our HG area has been the only one that is touched. So we got a little touch on the HG area. Price is moving down out of here pretty nicely. So if you are in this one, and if you had this one preset, then maybe you were able to get into this. Once again, this happened in the overnight hours, and you may be able to take your stop and move it down a little bit now that we've had another swing. And where's my other swing, by the way? Well, this green candle right here represents a swing. So price came all the way down to here, green candle back up. Prices then have fallen for 3 straight hours. If you want, you could take your stop, move it down to here to lock in some of those gains and some of those profits. Japanese yen You know, the Japanese yen, I'd have to look at this area right in here. Once again, all of these currency plays are long positions. And the reason I'm looking at this one as opposed to this one right here is because this one's already been touched right through there, as that area has already been used up once. I also am seeing a weakening of momentum of this move higher. But I also like that this was resistance back here. So you may want to even... whoops, did it again. You may want to even widen this area out to contain this little bit of fair price value area here, which acted as that resistance point in through there. Great British Pound, I would use this area down in here where we had this basing before the very strong breakout. So a lot of currency areas really below current price. We'd need a little bit of a pullback in order to get filled on any of those. And so we're still, kind of lying in wait, if you will. But Canadian dollar, copper, S&P, crude oil, all Nasdaq, all trades that met entry still running. And so if you have anything that you'd like to see or anything you'd like to hear, do me a favor, leave me something in the comments below. I try to get back to as many of the comments as I can. Tonight's video, I'll probably do another video tomorrow in the morning instead of tonight. I've got a lot of plans going on this evening, and I know it's hard to believe, but I do have a life. So I'm going to I'll probably get tomorrow's video out in the morning as well, and maybe you can use them to help really set up your trading day for those of you that are doing intraday style of trades. If you guys have anything that you want to take a look at, give me a holler. Shoot me an email, chuck@iiefinancial.com. I'll do my best to make sure that I get back to you. And until tomorrow, I'll see you all real soon. Thanks, everybody.